Let's begin with the big deal of the day. Financial technology provider Fiserv is buying payment processor First Data in a $22 billion all-stock deal. Now, Jason, that $22 billion number represents a nearly 30% premium over where First Data closed on Tuesday, and First Data up big today.
Yeah, I mean, this is I think a very good deal for First Data shareholders. So congratulations. You should feel good about this. Fiserv is a company Matt and I talk about on Industry Focus here and there on Mondays. But ultimately, in a nutshell, this buys Fiserv market share into a part of the value chain that moves money around in this world of electronic payments. And it gives the combined entity really a chance to cut costs and boost margins over time, assuming they execute. The mechanics of the deal, as you mentioned, are relatively fair. All stock. It does seem like Fiserv had a decent past 12 months, and over the past 3 years, before today's sell-off, the stock was up 67%. So it's not like they're selling with the stock at depressed levels, and that's good. Probably could have gotten away with issuing debt to do this, but the thing about stock deals, stock is still theoretical, right? It doesn't cost them any money to do it. You see these big tech companies do it all the time, like Facebook and buying WhatsApp. So everybody, I guess, has an opinion on that. But ultimately, First Data they're a merchant acquirer, and so they just play a part of that transaction when you're going from the merchant to the Visa network to the bank. That's what Fiserv does. It could be argued that their competitive position is a little bit trickier in today's world with Square and PayPal. That's why I think the deal was a pretty good one, because I'm not sure I really feel as strongly about First Data as I do about Fiserv. But all in all, probably a sensible acquisition.
Well, I think this is probably a testament to what's happening in the bigger space. I mean, we're seeing a lot of consolidation. There's a lot of small players acquiring other small players, big players acquiring small players, and technology in general, like IBM and Red Hat, which we talked about. I mean, there's just a lot of consolidation going around because we have so many new startups operating in the space. So when I see stuff like this happen, I mean, it's not really a surprise, right? You can't have so many different operators within payments or other industries operating independently. There needs to be some consolidation.
And let's talk about that space to wrap this story up. Jason, you talk a lot about the war on cash. We talk about names like Square and PayPal. Does this deal change your thinking at all in terms of that bigger war on cash?
I mean, it makes me feel like Square and PayPal's position is a bit stronger, perhaps, today than it was 5 years ago. Now, to understand what Fiserv does, and these are two very different businesses. Fiserv is essentially a software provider for smaller financial institutions. And that's a good business in which to be, right? I mean, you provide some good software to big banks like this. They don't want to switch systems really ever. So you deliver a decent product. Over time, you can develop some switching costs there, which is a little bit of a competitive advantage. But I think the real question here is going to be, where is First Data's position in this value chain as we move towards this trend of electronic payments? 10 years ago, First Data's value proposition would be a lot more clear than it is today. I think today, investors, including myself, would ask themselves the question, why does First Data need to exist in a world where Square and PayPal are becoming more and more able to do more and more things? That question, I mean, time will only answer, really. The nice thing for Fiserv is, if for some reason First Data's business falls by the wayside, again, they only issued stock to do it, so they're not really out of pocket. Shareholders get screwed, but hey, that's life.